welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shel Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, after 2 days of gains, we're seeing a quiet session on the D Street today. About 114 points lower on the Nifty. It's hovering around 24,350 odd mark. This is largely because the Nifty Bank, which was so far the outperformer and was supporting the markets from the front for the last 2 sessions, is really taking a backseat today. About a 1% loss could be seen on the Nifty Bank right now. That's nearly 500 points gone, 51,823. Especially it's the private sector banks that are not really participating today. And when we look at the pockets that are still holding up, it's the broader markets, in fact, that are showing signs of recovery today, with over 1% gains coming in for the small caps and about 0.4% gains for the mid caps. FMCG, auto, metals, infra, and some gains on the PSU banks is where the action is concentrated. If you even look at the top 5 movers on the Nifty, barring just slight indication from the auto sector at large, there are varied sectoral stocks which are actually making the top 5-6 movers on the Nifty today. About a 4.5% move on Adani Enterprises. Tata Consumer Products is up by 3%. Maruti is up by 2.5%. Hero Moto and Adani Ports. Adani Group stocks are definitely coming back in flavor today. Apart from this, the PSUs have also slipped into the red now. The PSE index is absolutely flat. Most of the gains have been given up, but railway space stocks, some of them are shining bright. IRFC, for instance, is up 8%. You can also look at how RVNL, IRCTC, and many of these stocks which are in the buzz right now. Good afternoon, Shel.
Good afternoon, ladies and gentlemen. I also take heart from the fact as to how the repair is happening in the market. Let's look at Poonawalla FinCorp. 9.5% higher, Sakshi. I'll request the PCI to also fire the long-term chart. Remember, just last week, it was a disastrous set of second quarter earnings, which saw a very sharp rise in provisions that almost killed the long side sentiment on Poonawalla. And here is an intraday chart for you, up 32 rupees, and this is how it happened. It hit a low of 297 just 2 days ago, and from then on, you have a how much? Almost a 12% percentage point uptick. Look at Container Corporation. As I was mentioning it in the morning, it is available at a 21-week low, and that, ladies and gentlemen, are buying points. You've seen almost 4 digits on Container Corporation, and here is a stock that was available at 700 something, 790 in the morning. This is something that you need to look at. So this is not just a one-day rally, is all I'm trying to say. These are stocks that are moving after a fairly sensible and deep correction, and this is what needs to be looked at. Take a look at IRFC. This was the erstwhile darling that we used to talk about on a very regular basis. IRFC, RDA, HUDCO, all of them went into a hibernation mode for the last 6 months. If I remember correctly, the all-time high on IRFC is 220 rupees. Let me just check that and get back to you. And from then on, it went all the way down to about 138. And here we are today, just 11 rupees higher on today alone. Yes, the low was, ladies and gentlemen, 133, hit on the week of October 21st, and the all-time high was 230. So 230 to 130, and from 130, this is the recouping that is happening. This is the 100-week average, Sakshi, that we are able to see on IRFC. Let me just recheck that. The green one is okay, a 54-week low.
Okay.
And again, 54 is a Fibonacci number. So lots of statistically bounces that are coming in are being relevant. IRFC, Container Corporation, and of course Poonawalla FinCorp. Buy the dip in sensible stocks. You can also look at Manappuram Finance. So these are low ticket items. Instead of chasing breakouts, it's always better to chase the breakdown. It's actually 162. Today morning we were talking it at about 158, 154, and 3 days ago it was 138. So this is how money is made, provided you know what to buy when.
Absolutely. Let's welcome our guest on board then. Kiran Jani, Head of Technical Research at Jainam Broking, is now joining in. Warm welcome, Kiran, and happy Dhanteras, happy Diwali to you. Hope the festivities turn out to be fantastic for you, your team members, and your family members at large as well. And may you continue to give more bright ideas throughout the new Samvat to all our viewers as well. Tell us. How is Diwali looking to you on the D Street, and what is it that you have to share in terms of maybe benchmark indices expectations or maybe stocks?
For your such a wonderful wishes on Diwali season, and I would also like to wish all the happy New Year and happy Diwali in advance. All the Dhanteras happy to you, your team. Sailji also is there, and all our viewers too. Now, as you asked that how this Diwali looks, so this Diwali looks on B Street, it's something like we can see a sale. Generally, we have seen that on Diwali, there are various sale is going on. So this price correction is also offering us a very good sale in our current market state. Definitely, we can deep into the stock specific ideas, and we can pick specific stock ideas. As Sailji discussed about PSU Bank or PSU stock, it has rallied wonderfully, and now it is available at 50%, 60% kind of a price correction. Definitely, you can check out some of the stock based on their valuations and based on their chart setup, and you can dip into that. So as of now, looking at market, so I would like to first highlight about the Nifty and Bank Nifty. So Bank Nifty and Nifty both has formed is a short-term bottom as of now, as far as chart concerned. Nifty 500 is also formed bottom as far as chart concerned. So level wise, if I speak, if market is not break down 24,000, then we can expect price rally somewhere around 24,800 to 25,000 during November month. Similar way, Bank Nifty, if it is not breaking down 51,000, then here also we can see 53,000, 54,000 in upcoming month. There are two big events taking place next month, that is US election and our domestic Maharashtra election. So both are very high volatile event. And looking at current structure, we can expect Nifty again to touch 25,000 and Bank Nifty again to touch 53,000. So we are quite bullish. Buy on dips would be the strategy on Nifty and Bank Nifty both.
Okay, that's a fair point. Kiranji, one of the biggest contributors to this uptick in Nifty Bank and Nifty have been State Bank of India and ICICI Bank. How do you see these charts, especially SBI?
So considering SBI is giving a fresh breakout at current market price. LG, if you look at SBI has taken a wonderful support at 200 days moving average with positive divergence on momentum indicator. Now that momentum indicator trading into the bullish zone, prices are also stable about these all important moving averages like 100, 200, and a rectangle pattern is getting breakout. So at 825, 820 would be the great level to enter. SBI keep a strict stop loss below 800, and we can definitely expect price target of 880, 900 in upcoming time. So we are quite bullish on Bank Nifty. Of course, the October month is not good for the Bank Nifty. Seasonality wise, banking sector has been done in October month, but this time it has not done. So possibly November month would be the great for the Bank Nifty and the banking stock.
Okay, got it. Let's focus on the entire auto space right now. Kiran, anything that looks positive to you here? Of course, we are already hearing that the discounts are at their peak at the Diwali season, and you know, a lot of purchases are already taking place on these peak festive days, which are auspicious as well. Your sense within the auto space, where do you see outperformance on D Street?
So looking at auto, we are liking two-wheeler stocks definitely at even a current market price. We are seeing that last on Dhanteras, there are so many auto. We have seen there are so many people has bought auto and everything, but still we on ruler side demand we are seeing that this two-wheeler stocks look very good. So in within the two-wheeler stocks, Hero MotoCorp would be the preferred pick. No doubt that auto stocks are below its 200 days moving average, so we have to bit cautious. But you can with the stop you can keep a stop loss and you can go long. Hero MotoCorp, if you look at the its momentum indicator is already in oversold territory, so there are very good chances we can see some bounce, and also previous breakout level somewhere around 48, 4900. So at current market price, one can go long on Hero MotoCorp. Keep a strict stop loss below 4,700, and we can expect price target of 5,400 at least by December. So little bit longer term time frame call, but one can go long on Hero MotoCorp.
Okay, let's look at the correction on Tata Motors, Sakshi. What you see is 813, 843 actually, and today's low, if I can just check, was dramatically lower. 1 second please. what was the low for today? One second, 800 and yesterday's low was 829, and this again is a 3-month fall that we are seeing continuously on Tata Motors. If the PCR can please fire a long term chart. Again we buy the fear Tata Motors will continue to exist much after I have bid goodbye. So one needn't fear about whether the stock will go down to zero, it won't. But it is this pain, ladies and gentlemen, which you need to practice buying. And the record high for this one is somewhere like 1170. 1170 to 843 is the correction, which is 24%. Kiranji, what are the medium term charts of Tata Motors telling you? This is a price that we last saw in January of 2024. So that makes it kitna 9-month low.
Correct. So looking at Tata Motor, as you mentioned, we are trading below 9 months or 10 months low. But the point is that if you look at the price chart on election day, Tata Motor made a low of somewhere around 850, and we has broken that low also. So those are the swing low and swing high. Once after that high is broken out, we have seen a fantastic rally like 1150, 1160. Now that a low has been broken down, so there are very good chances this profit booking can go a little bit lower also. But looking at its momentum indicator, there are very high chances as we are trading into the oversold territory. There are dead cat bounce surely will be there. But looking at monthly and weekly chart, the structure has been damaged a lot of. So for the fresh buying, we are not recommending at current market price. We would like to wait and watch. Possibly at near 800 or 780, we can once again due diligence and we can go long. As of now, whoever is holding this particular stock, keep a very strict stop loss below 800, and for the fresh buying, wait and watch.
Wait and watch. Okay. That's as far as the auto space is concerned. Remember, Force Motors is something that we had caught in the morning. It's 20% circuit up in trade right now at 7661. Again, what we had talked about, the momentum building up, it's now reached 20% circuit. We'll keep an eye out on this one for the following days as well at 7661 currently. Railway space, that's outperforming again after a long haul of consolidation. Many stocks coming back in flavor. But is this showing you any kind of promise, Kiran, that one should be really looking at a fresh within these railway space, or is it just going to be a bounce that may not sustain, you know? IRFC right now about 8% higher as the top mover within the railway pack, but most of the stocks are up in the range of 1 to 4 odd percent.
So if you look at the overall railway sector, we like two stocks, and as a disclaimer point of view, I would like to highlight first IRFC. We already suggested IRFC to our clients in the morning only. If you look at the IRFC chart, the stock price has corrected from 220, 230 level to 140 level. Now at 140 on weekly chart, we are seeing a very fantastic support, number one. Number two, 2 days back, the stock has given a breakout from its falling channel and falling wedge. Number three, stock has developed 3-bar positive divergence. It's a classical technical pattern. So it is exactly suggesting to go long somewhere around 147, 145 with the strict stop loss of 130. And looking at overall chart pattern, there are very good chances we can see price target of 175 to 180 in very short time. So IRFC we already have suggested to our clients and associates. Another thing, another railway stock which we are liking is IRCTC. As we are into the festival season, vacations are there, and December one is also going to come. So again, a vacation theme and the travel themes will pan out as a fundamental wise. And looking at IRCTC chart, again stock price is trading near its election day low. And since last 2 days, some reversal pattern is also panning out. So IRCTC at value buy at current market price at 848. 30 level, keep a strict stop loss of 800, and we are likely to give a target of 1000. So IRCTC and IRFC both are our preferred choice.
Right. Kiranji, for the research that Jainam does for the long term, what are the Samvat picks that your research house has come up with? Anything that you can share with our viewers in terms of technical inputs?
Yeah, so looking at somewhat basis and Diwali pick wise, we shared first of all the index view that we also discussed. We are very much optimistic on market considering the current development in on domestic and as well as the global wise. So 24,000 to 23,700, 800 are the zone where we are asking our client to accumulate the stocks and the index. Now, stock specific, we would like to suggest three stocks here also as a somewhat pick. First is the Hindustan Zinc. If you remember, 2 weeks back, we discussed Hindustan Zinc somewhere around 500 rupees. And from that, stock is now 560, 570 level. We are still bullish on Hindustan Zinc. Anyone can go long at current market price or any dips toward 530. We are expecting price target of 650, 700 in very short time. Keep a very strict stop loss somewhere around 480 or a 470. So this is our first pick. Another pick which we shared to our client is Polymedicure. If you look at the Polymedicure's daily chart, stock price has given a fresh breakout and today it is up by 7-8%. So definitely we are not likely to chase this particular rally, but any dips toward 2700, 2600 is again a very good buy for Polymedicure. Keep a very strict stop loss of 2500 and we are expecting price target of 3000 in short time. So Polymedicure is our second pick, and third pick I would like to share as a Diwali, that is Deepak Fertilizer. So Deepak Fertilizer also given a breakout from its double bottom pattern on daily price chart. Stock price is historically giving a very good return. If you look at the weekly, monthly, and daily price chart, momentum indicator trading into the bullish zone. So again, a very good pick. You can buy on dip somewhere around 1200 to 1150. Keep a strict stop loss below 1000, and we are expecting price target of 1500, 1600 short time.
Okay, got it. So those are the somewhat picks that you can definitely refer to if you've been looking at for Diwali top stock ideas. Three ideas have been shared by Kiran. So keep an eye out on Hindustan Zinc, on Polymedicure, and on Deepak Fertilizers as well. The other space that is bouncing back when we're talking about railways, how can defense be also left behind? Look at the kind of stocks that were thrashed left, right and center. Some of them are now up 5% circuit. Cochin Shipyard, 5% higher in trade. You also have several other stocks like GRSE, Mazagon, all up and about. Data patterns from the defense pack is also buzzing sharply higher in trade. And when we look at even DCX Systems is also sharply higher. So data patterns is up 14% right now. So some such stocks, Paras Defense is up 5% as well. So momentum returning to the defense stocks. Should one now think that the bottom is made and go gung-ho on defense stocks yet again, Kiran?
So overall, as we discuss about the PSU stocks, the same way we are seeing defense stock also given too much correction in last 2 to 3 months. And if you look at the price chart at current market price, there are few defense stocks are available at bargain price. So first we are like one stock, that is BEL. So look at BEL daily price chart. Stock price has taken a support at 200 DMA. It is also giving a breakout from its falling channel. Stock price has made hammer candlesticks pattern last week also, and from there the stock price is back into the height of high bottom pattern. So at current market price, one can go long on BEL. At current market price somewhere around 289, 288. Keep a strict stop loss below 270, and here we can expect price target of 330, 340 in upcoming time. Another defense stock which we are like, that is BEML. If you look at the BEML chart, since last 3 months, stock price is into the horizontal pattern with inverted head and shoulder pattern, and stock price has taken a support of its 200 days moving average. On momentum indicator, clearly we are seeing bullish divergence also. So BEML is also good at current market price. One can go long, keep a strict stop loss below 3800, and we can expect price target of 42, 4300 in upcoming time. So from defense sector, BEL and BEML would be the preferred choice.
Let's take a detour into the markets. Actually, there are pretty much no volumes in this fall today. If at all you consider 0.5%, 100-point downtick on Nifty a fall. So HDFC Bank may be down 1.1%, but just 2,100 crores worth of shares traded. Maruti is in the green, so it's in our favor. We should be thankful. But volumes are fairly substantial for Maruti, 1670 crores. You have a very, very strong move coming into IRFC. It's rare to see RFC in the top of 5-7 traded counters. So please note, ladies and gentlemen, this is the beginning of a move accompanied by a rise in price and a surge in volume. 8 crore 34 lakh shares of IRFC have been traded. Let me see if it is a multiple of the 5-day average, which I hope it will be. Yes, this is 4.5 times its 5-day average. So the mojo is coming back. Look at how the underlying theme that is running in the market is working. Let's look at the broader advance decline ratios. So actually 1800 stocks are in the green versus 550. So it's an easy 3:1. For every one stock that is falling,
Yeah.
3 are in
Green.
the uptick. And Sakshi and I track 19 indices for you. Okay. Number of indices that are up are less. That's 6 plus 1, 7. So about 12 are in the red. But losses are related to an event, which is Nifty Bank, monthly expiry today, IT and Pharma, deep gains over the last 4 or 5 days, therefore profit booking, and Nifty 50. The advanced decline is 21 is to 27, which is pretty good, just 0.5% lower. So nothing to be worried about. Kiranji, almost now 33 minutes left for trade. Anything that catches your fancy for tomorrow?
So if you look at current market status, Reliance industry looks very much promising. So again, a disclaimer point of view, we already discussed in the morning to our clients and associate. Now coming to the Reliance intraday charts, if you look at the hourly or a 15-minute charts, the clear-cut falling wedge pattern breakout has been given by the Reliance industry. With that, the bullish divergence is also available on the intraday price chart. So there are very good chances if stock prices settle about 1350, 1345, then we can expect some gap up opening also, or we can also see some good amount of rally should come on Reliance industry. So at current market price, we are recommending go long on Reliance. Keep a strict stop loss of 13, 10, 20, and positionally, say for example, in next 10 to 20 days, we are expecting at least 100 rupees rally on Reliance industry. So for BTST and for the positional wave, Reliance is look very good at current market price.
Okay, wonderful. Well, Kiran, we will now also have our reporter Asim now joining in. You've shared some of the picks from your end. He also has collated a list of stock ideas from top brokerage houses for Diwali, and this is what all the investors are keeping a keen eye out on. So Asim, tell us for today, which are the brokerage houses and what are the kind of sectors the top picks have been chosen from?
Yeah, thanks, Sakshi. So we have 5 brokerages today, and we have two stock picks by these brokerages each. First one is SBI Securities, and it has chosen Titagar Rail Systems and given a target price of rupees 15,1510. The brokerage says that company is well positioned to leverage on healthy growth prospects backed by a growing demand, attractive rail value chain opportunities, higher infrastructure spend, and policy support. Their next pick is Coal India, and they have given a price target of rupees 593. The brokerage says that for FY25, FY26, the company has set an ambitious production target of 838 million ton. Coal India has taken steps to upgrade the mechanized coal transportation and loading system under first mile connectivity projects. Another brokerage we have is Kotak Securities. They have picked Yes Bank. They have picked Axis Bank as the Diwali pick, and they have fixed a target price of rupees 1500. The brokerage said that Axis Bank has one of the best upsides among large private banks at these levels. The business execution is on expected lines with a focus on the GPS strategy to build a solid franchise. The asset quality ratio was stable with slippages stable at 2%. Their next pick is Gravita India. They have given a price target of rupees 2800. Kotak Security says that Gravita India plans to raise its recycling capacity by 72% to 500 kiloton per annum by FY27. The brokerage expects earnings per share to grow by 31.8% in FY25 and 31.6% in FY26. The third brokerage we have is Systematics Equities. They have picked PNB Housing Finance as their Diwali pick. They have given a price target of 1,333. The brokerage says that the company aims to grow its retail loan book to over rupees 1 lakh crore by FY27, targeting a CAGR of 16% from FY24 to FY27. It also adds that affordable housing is expected to contribute 14 to 16%, while the emerging market segment is projected to account for the emerging market segment is expected the emerging market segment is projected to account for 22 to 25%. Their next pick is Zomato. They have a price target of rupees 320. The broker says that Zomato aims to open 2,000 stores by March 2026, having already launched 113 stores. The management remains confident in maintaining high service quality to attract customers in the new markets. Additionally, Blinkit has been steadily expanding its SKU offerings, which has played a key role in driving overall growth. Next brokerage we have is JM Financial, and they have Reliance Industries as their top pick. They have given a price target of rupees 3,500. The brokerage says that RIL stock price has underperformed in the broader markets with just 5% returns in CY24 year to date versus 15% return for Nifty 50. JM Financial believes that this underperformance could reverse, supported by faster than anticipated telecom tariff hikes by telcos, recovery in retail business, and positive announcements on new energy business. Next pick they have is Bajaj Finance. JM Financial has given a price target of rupees 8,552. The brokerage said that on the valuation front, Bajaj Finance is at a reasonable levels of 4 times FY26 expected book value, which is a tad below its long-term average. Thus, scope for re-rating on the upside is there, considering its healthy return on equities and return on assets and growth prospects ahead. The next brokerage we have is SGFC Securities, and they have picked NCC as the Diwali pick. They have given a price target of rupees 363. The brokerage says that NCC plans to bring down its debt levels to 1,000 crore and is likely to normalize to lower levels in the coming quarters and will bring it closer to rupees 500 crore by FY25. Improvement in collection, reduction of working capital debt, and receipt of mobilization advance will bring down the debt levels going forward. HDFC Securities' second pick is SBI. They have given a price target of rupees 960. The broker says that SBI is equipped to sustain growth given its surplus liquidity and a comfortable loan to deposit ratio of 76.5%. SBI maintained its gross NPAs and net NPAs at 2.2 and 0.6% in Q1 FY25 as seasonally high gross slippages were offset by high recoveries and write-offs. Back to you, Sakshi.
Right. Thanks a lot, Asim, for all that update. A slew of brokerage houses, top stock ideas in terms of Diwali. So there are picks and many picks that are coming in. So focus on all of those in case you're looking to create a basket of stocks as a fresh portfolio this summer. Thanks a lot, Asim, for that. And we'll also thank Kiran on that note for being with us onto this special edition. But we'll also welcome Mr. G Chokalingam, the founder and the MD of Economics Research, joining in on the special broadcast now. Last half an hour of trade, but let's get talking to Mr. Chokalingam as to what is in store for the markets over the next Samvat. Warm welcome to you, sir, and thank you so much for taking the time out. Happy Diwali to you, to everyone in your family, your loved ones, and of course your team at Economics as well. And of course, we've cherished so many stock ideas that you have talked to us about over the last Samvat. Tell us, are you going to be expecting big bang returns for the next Samvat? What is the strategy that you're recommending clients to have? Any key stocks that you have for the new Samvat?
Yeah, thank you very much for your kind greetings. I wish you all at Business Today TV a very happy Diwali and good health and a lot of prosperity. There is a sudden shift in our strategy now. For last 3 to 4 months, I have been quite fearful about small and mid cap. But now all of us know nearly 27 lakh crore got wiped out in just last 5 weeks from the small and mid cap index constitutions. And overall market cap is down by about 45 lakh crore. In the process, what I find that suddenly within a couple of weeks, a lot of small and mid cap stocks have become very attractive. And this is the beauty of the market. There are many small cap stocks from 52-week high. Within 5 weeks, they have become 52-week lows also. So it's a good opportunity for the traditional analysts or investors like us who focus on certain values. And therefore, for coming to your direct question, I believe by next Diwali also, once again, selected small and mid cap stocks will create a phenomenal wealth. So investors need not worry about what is going on because FPIs normally they invest 80-90% of the money only in the large caps. So they are exiting large caps. But every week, even now, 7 to 8 lakh investors are coming. You will be surprised to know the whole October we saw around 25-27 lakh crore of getting wiped out from small and mid cap. Still, sorry, nearly 30 lakh new investors have entered the market in October month alone. So I am banking on this fact, this insight. I think they are going to drive once again, of course, perception driven as well as value driven, growth driven stocks. There will be some change in the attitude, if not all, some of the significant proportion of new young investors after losing a lot of money in perception driven stock. So therefore, I am very optimistic and I believe I am looking forward to a lot of quality SMC stock playing out in a big way over the next 12 months.
Namaste Chokalingam ji, and festive greetings to you at Economics and everybody at home. You've written a very evocative note for your clients, and it states that we can divide the current 20 crore investor base as to two segments, one around 4.5 crore that are seasoned and well experienced investors who and whose families are investing for 1 to 3 generations, and then at least 2 or 3 crores of new investors could be kin, friends, relatives of old generations or have exposure to old generations in the market. Now, given that this older generation would be talking about how value has been created in multi-baggers, and you also say that small and medium cap companies are where you are looking at. Maybe one or two names that you can share with our viewers where for the next 1 year we might see value creation.
Certainly. Before that, thank you very much for your greetings, kind greetings. I wish you and your family happy Diwali.
Yes.
Yeah, I'm happy that you read out a few lines from our yesterday's report.
Yes.
You know, it makes, if you, I won't take much of time, just 1 or 2 minutes. It makes a lot of relevance to, see the kind of exposure investors have in the stock market, for more than 5-10 years. That's what helps them to, first of all, to protect the wealth destruction. Then only we can talk about wealth creation. So that's why I'm extremely bullish. Out of nearly 20 crore investors, I believe at least 7-8 crore will chase the quality. They will also play perception-driven speculation, but they are smart enough not to come on road by putting everything in speculative stocks. That's what I meant. Now, definitely, a couple of stocks I would give. The foremost one is LGB Balakrishna Brothers. LGB
NG
Balakrishna
Balakrishnan.
Brothers. Yeah. This stock, I recommended many times, and many times I closed successfully.
Yes.
After last time we closed, it has corrected 15-20%. That's why we have initiated. I like this stock most. It's a cash-rich company, and it has got around 38, 39 manufacturing units across India. I haven't come across any automobile firm having this many units to manufacture in auto component space. So every year they keep setting up 1 or 2, 3 new plants, and they cater to two-wheeler industry. They make chains and transmission products. Very interesting thing about this product is that we all know the entire automobile industry is going through tough time. There is a slowdown in the growth, but two-wheeler has been exception. That segment is still growing. We saw the numbers. So that is where the confidence comes from the stock. So valuation wise also, it is trading only around 13, 14. So with a lot of expansion happening, and and two-wheelers industry continue to grow, and good management, strong balance sheet, I think this is the one stock I can bank on heavily for the next Diwali. And second stock is FDC Limited. It's a Mumbai-based pharmaceutical company, FDC Limited. I like this stock a lot. The management is very, very investor friendly. In the last 6 years, 5 years, they gave buyback. Almost every year they do buyback, and they are investor friendly. This is still, even now, it's a cash rich company, and it is into domestic formulation. And the stock also corrected a lot. And in fact, though the manufacturing plant is outside Mumbai, they have a two R&D center within Mumbai, Jogeshwari and Kandivali. And if somebody walks around these, R&D facilities, forget the pharma business, I become extremely bullish on the land bank story itself. Ultimately, I may be wrong. Most of these manufacturing companies will shift outside Mumbai because land is becoming gold in Mumbai. Every square foot is becoming several grams of gold. That is the kind of valuation. Apart from that, if you look at all domestic formulation companies, they trade at 5 to 8 times EV to sales. So if I give a lower end of 5.5 times, there is a significant opportunity from this stock. The third one is JK Tire. Of course, the September results will be a little disappointing because in August the rubber price shot up, even the crude oil price shot up. But very unbelievable thing has happened because I have been tracking tire industry almost for 25-30 years. I have not seen this kind of crash in natural rubber prices. After hitting lifetime high of 2,47,000 rupees per ton in August, the domestic natural rubber prices have crashed 64,000 rupees in a matter of about 2.5 months. And this is going to help the tire companies to post very impressive results for December quarter results, October to December. So, and this company is doing very well in Mexico. Its subsidiary in Mexico is doing extremely well, much better than the domestic business in terms of margins. And not only that, despite wars in two regions of the world, Middle East and Ukraine, the oil prices have crashed. We saw last Monday the oil price crashed 5%. Now, oil price is down 20% from 52-week high. So the synthetic rubber price also would moderate. So the Q3 will be good. Yes, automobile slowdown is happening, but one good thing about the Indian tire industry, almost around 70% of the demand is coming from the replacement market. So therefore, this is a third stock. The last one I would give briefly, Cyient Limited. Yes, the stock is trading at a 4-digit, but still by next Diwali, it can give anywhere around even 20 to 35% return because they already created, Cyient DLM and unlocked money. Now they have started a 100% subsidiary for a semiconductor business. And I have a confidence that the management will create value for semiconductor business as well. And also they got into, the energy related business in, they acquired some stake. So all this would unlock a lot of value for Cyient shareholders. And also the September result was quite decent enough. And therefore, I like this Cyient stock as well. And personally, I don't own any of these stocks directly or indirectly through any friends or proxies or relatives.
Mr. Chokalingam, if you don't own any of these stocks, then how will you create value for you and your family?
I missed it. People may not believe I missed it. That's why every month I think I'll quit the job and manage my money. But my clients and close friends are not allowing me.
Okay,
It's a big loss for me, whether you believe it or not.
My suggestion is, I have always asked you about stock ideas. Maybe you should ask me also. Then I will tell you which is the best one amongst the 4 that you've mentioned.
Thank you. Thank you.
If you don't ask me, then I won't tell you. But
No,
if
please
you
tell
ask,
me. Please tell me. Please tell me.
okay. I think you should have FDC in your long-term portfolio.
Okay, sure.
This is the 6th buyback they've done, reduced equity, and this is a stock that will definitely see better days ahead. I think the most recent high was 600 rupees. It's now at 522, 523 rupees. But my suggestion is that you must look at your suggestion very seriously on FDC.
No, you are saying I should not buy or I should buy?
You should buy. You should buy.
No, I agree with you because see, I have been tracking pharma business, the day Aurobindo Pharma listed. It has gone through a lot of structural change and transformation. Today, the foreigners love, the domestic business. Look at the heavy chemical. I initiated 10 rupee share at 88 rupees in 2008-9. And from there, it has gone up around 50-60 times. And it is trading at 10 times EV to sales. So, I firmly believe a day will come. FDC also will command, if not 8 to 10, at least 6-7 times EV to sales, and plus the growth will come. Very interestingly, in June quarter, the domestic formulation business grew by 23% for FDC. And not only that, 83% of the total sales are from domestic formulations. So I believe it's a safest stock in this little uncertain time for the markets.
JJ. And Sakshi, I have always believed that Mr. Chokalingam is the Rajnikant of stock picking. When I was in the market in 1999, I first spoke to Mr. Chokalingam about a Delhi-based company, which of course no longer exists, but he was working for Inam at that point of time, and I used to quote him very extensively. So the sad part is that in the 32 years that I have known him, I have never met him in person, but such is life. And Mr. Chokalingam, your deep research, I read your note on Equinomics regularly, and it is very, very well done. And of course, the 4 stocks that you mentioned are deeply researched. But FDC makes 2 products. One is Electrol, which as children we've always had very regularly in summers. And given the heat that is there these days, it's a product which has unlimited potential. And secondly, Sakshi, they are very big in eye care, and all of us are now addicted to social media, so their eye care portfolio will do wonders. And once Mr. Chokalingam buys this, then you see a new thread will emerge. His name will come in the shareholding pattern, and that itself will create a lot of dhamal. Mr. Chokalingam, on my request, please also look at the shareholding pattern of FDC. You will find many friends invested in this company.
It's a great company. It's a great company. In fact, we took around, of course, I can share this publicly. We went, this Kandivali R&D center. We walked around FDC outside the factory.
Yes.
Anybody has a right to do that. I saw that it's a mind-blogging, the kind of land bank it has. As you also talked about buyback. I haven't come across, small and mid-cap space, any company doing so many buybacks in a 6-year time frame. That shows the kind of, the friendliness to the shareholders.
And Sakshi, one more thing.
Sure.
Mr. Chokalingam mentioned about land being gold in Mumbai. I have a very interesting story to share. Just in front of Taj Lands End, where we have our shows, there is a empty plot. It used to be Juhu Centaur at one point of time, and because of the bomb blasts in 1993, that hotel was pulled down. That empty piece of plot was sold to a company for 150 crore rupees. Now flats, super luxury flats are coming up on that plot of land just facing the sea, and the cost of each flat starts from 150 crores.
Oh.
So that is the value of land in Mumbai.
So you go to Arya Colony, even you can see the ad. Arya Colony, deep inside the forest, I saw per acre 9,500 crore, and you have a Nesco on Goregam Highway. In front of the gate, you have the metro station. The company has posted a phenomenal results, and it has shown 1,600 crore cash. Apart from that, it has got 70 acres of land. As you said, I can become successful. This stock plays out because I have invested, my daughter has invested, my company has invested, all of us invested in Nesco. So my purchase was more than 30 days old, so I can keep talking about it. This is one stock, another stock. I believe, I may be absolutely wrong, but I believe in 3 to 5 years, this will be like a next BSC. This should give, multi-bagger return. That is my strong conviction, and I put my own money in the stock.
So Nesco and FDC. FDC, you please buy based on my recommendation. I rarely stick my neck out. I only listen.
I have to wait for certain days to fulfill the compliance requirements.
Okay, Sakshi is getting bored. Only you and I are talking.
No.
But the markets are slipping. 320 now almost. 330 on the Nifty. 127 lower. 500 points cut on the Nifty Bank on its monthly expiry day. 370 down on the IT index, and the Nifty 500 down 50 points. Sakshi, yours. Sorry for such a long monologue between me and Mr. Chokalingam.
Not at all. I think this was really good. We rarely keep focus on one company and discuss all the aspects of why a company is a brilliant business that one should be really looking at, and those are also the details that our viewers, really cherish. So I'm sure everybody will at least start their own research on FDC after this conversation today. But I wanted to ask you, Mr. Chokalingam, with the wealth of experience that you have of studying various cycles in the markets, after the recent downturn, what is it that has changed in your approach to the markets? What is it that you would advise for the next Samvat to all the investors to do differently from what they have done in the previous Samvat? What would you say?
Very interesting question. One is that, as I said, now today 20 crore total investor base, close to 20 crore. Around 10 crore came into the market in last 10 years. But I have interacted with a lot of them. The majority of them don't look at the valuation parameter. For example, all the financial services company, particularly the microfinance, new age finance, they rallied, and many people bought stocks at even 8 times, 10 times price to book value. Now just look at Spandana, the finance company. I may be wrong in pronouncing the name. The stock is down 70%. Now it is discount to adjusted book value. So just imagine if you lose 70% in one stock, then how many months or years you have to wait for making up that loss. So what has changed in my mind is that, it is not only the inferior stocks or valuation wise stretched stocks, even the quality stocks in this last 5 week meltdown have come down. So I have again changed back to, the quality stock. So I make a distinction between, perception driven stock and quality as small and mid cap stock. So that is one, segmentation I have done, and I suggest new investors also to look at, the quality stock. When I say the quality, the management quality, balance sheet quality, and comfortable valuation zone. And second, we traditionally believe, the market is always smart. We learn from the market. We have to learn every day, and I keep learning from the market every day. So we always believed, the large cap would be relatively safer, but it's not real. In the last 5 weeks, you saw Reliance also falling even 15, 16%. But there are one or two quality small cap, mid cap stocks still standing steady. So what has happened? This has to do with outflow of resources by foreign investors who have taken more than 1 lakh crore. So what I learned something new, which I'm implementing in my research calls, is that really, if you look at a very quality small and mid cap, you can still outperform even the Sensex, and you can outperform the large cap, because now the foreigners are taking away money, but the flood of retail investors are still coming to the market, and that is giving some sort of support to quality SMC stock. So to be defensive, I am not saying totally you forget large cap, but 100% reliance on large cap stocks need not be a safe defensive strategy. Perhaps very high quality small and mid cap stocks also, like for example, Cyient. It stood out very firm in the last 5 weeks, despite all the problem in the market, problem in the IT sector. So that is what I learned. The second thing, of course, there are a lot more learnings, which is the beauty of the stock market. So I would share these two with you.
Okay. Mr. Chokalingam, before we let you go, would you have a view on how large caps such as Tata Motors, L&T and Reliance are trading? We've had numbers coming in for all three, and nothing much to talk about. In your own experience, where do you see outperformance based on second quarter numbers?
Definitely, it should come from Reliance, because all of us know the way they created, unlock the money from Geo Financial Services. They would definitely unlock next from the digital business, because the management itself in the AGM said that they are looking at doubling the value. So if you have to do that when the oil and gas segment is still going through stress, the one great opportunity is to unlock money for shareholders through the digital business. And then Geo Finance also will create a lot of value. So I believe the Reliance industry would outperform. And second, followed by L&T. But the L&T problem is 50% of the revenue from IT services, 50% is from the engineering services. So in case in the Middle East, the problem extends to many more regions, then that could be little stress for L&T, engineering business focused on the Middle East. Otherwise, the second one will be L&T. Third, Tata Motor, I may be wrong. I believe even now it is good to sell, because economic slowdown in Europe is really serious. And secondly, on the domestic front, suddenly the automobile, particularly passenger vehicle sales, have slowed down. And you saw SUV sales growing strong double digit. Now it has become poor double digit. So I believe the base effect will play out. The competition intensification would also hit. So I am very negative on passenger vehicle segment. Therefore, I think Tata Motor may fail in outperforming the Sensex and Nifty.
Okay, Mr. Chokalingam, have you looked at the Adani Group stocks also afresh? Is there any promise that could be seen for the new Samvat? They have been in a long time frame consolidation space, or do you think there will be some more time before things really get on the brighter zone for the entire group as a whole?
I would suggest to investors to look at two opportunities related to Adani Group. One is Adani Port. That's one stock I believe, chances of going wrong is very remote. It can create, because, India's exports may not grow, but imports are continuously growing. So any port business, would depend on both export as well as import. So therefore, perennially, the port business will be a growth business, and Adani Ports being a leader, that is one stock I can be bullish. And second, one can look at what Adani Cement would buy more cement companies, because a couple of days back, if you have seen, they talked about increasing the cement capacity. They are given the number as per the media sources, and that would mean more possible acquisition by Adani Cement. So if you can look at any small cement companies which are trading at $50 per ton, enterprise value per ton is around $50-60. I think a lot of wealth can be made. I firmly believe, if not Adani Group, the consolidation in the cement industry will continue. Some of the small quality cement companies have a potential to offer very good wealth creation.
Okay, got it. So those are the key stock ideas from the Adani Group right now. 3:27, 3 minutes to go before we shut shop, and tomorrow we will be looking at a bright new Diwali as well. Mr. Chokalingam, what else would you want to share in terms of what to expect in the next summer? Would you share a target on the Nifty with us?
Yeah, I don't shy away. Definitely. I think it would definitely give you around 8 to 10%, not more than that, because there is a lot of stress in a lot of bigger businesses, So FMCG, you have problem. IT, you have what I would call single-digit growth syndrome. That is there in IT sector in terms of dollar revenue growth. That is there in the automobile sector in terms of volume of vehicle sales. That is there in the cement business in terms of volume of sales. That is there for FMCG in terms of revenue growth being in single digit. So the single digit growth syndrome has affected several segments of Nifty and Sensex. So therefore, I see opportunity only for 8 to 10% for 1 year, but I see plenty of opportunities in the small and mid cap to create wealth by next Diwali. But on a selective basis, the small and mid cap pack as a whole, they may lose even another 10-20 lakh crore. I am not ruling out that, but there would be unique place which would stand out and perform better.
Right, Mr. Chokalingam, thank you so much for your time. It's always such a pleasure to listen to your very well reasoned investment thesis, and again from Sakshi and my side, as also from Business Today's side, warm wishes to you for festivities ahead. May the wonderful life continue.
Thank you. Thank you very much.
Thank you so much. All right, we'll start wrapping up the trade now. 120 points lower. We are back at 24,350 odd levels, and perhaps after a 2-day of gain, we are looking at
1 day of
snapping
rest.
that 1 day of rest before we start off with the Diwali sparks on D Street yet again. With that hope, about a 455 point of a decline, 460 point of a decline on the Nifty Bank, 0.9% lower. It's the broader markets that have managed to pull themselves into the green. FMCG, infra, realty, media stocks were the only sectors that pulled themselves higher. Adani Enterprises ends about 4% higher in trade. Hero Moto, Tata Consumer Products, Britannia, Maruti, these have been the top performers on the Nifty today. On the declining side, you had Cipla, 4% lower today. Shriram Finance also seen some profits taken off, 2.4% lower. Infosys, Trent, HDFC and SBI Life were the other big laggards. F&O space, you had Aditya Birla Capital as the top mover, about 5% higher. L&T Finance, Marico, Adani Enterprises and Manappuram Finance as those that outperformed as well. Within the broadest index, among the Nifty 500 gainers, you had Gala Precision ending 20% higher in trade. Force Motors another 20% higher in trade that we talked about. Jain Irrigation about 8% higher. Aishapura Mine Chem, Precision Camshafts, these were the top performers, about 13 odd percent higher for all of these stocks as well. Some other stocks like Omax Auto performing well in trade, about 6% higher in trade as well, and Action Construction Equipments also about 12% up. Data Patterns, Poonawalla FinCorp are the other big movers that we have discussed in the broader markets. But the screen is frozen, 24,350 there for you. Perfect 24,350, 116 points lower. Share.
Sakshi, and one thing is there, of course, we've discussed the headline indices. Look at the underlying. So headline indices are negative. IT, Bank, Nifty 50, Nifty 500 are all in the red. But the story is different. Look at the advanced decline. 1750 shares in the green versus 600 in the red. So it's an easy 3:1. For every one stock that has fallen, 3 are up. Now look at the Nifty mid cap index, where the action is. 54 out of 100 are in the green. Look at the small cap index, actually it is up 1.1%. So the trader sentiment in the market, ladies and gentlemen, is improving. Today we have fallen because of Bank Nifty, whose monthly expiry it was 470 points lower. Yesterday it was up 1088 points. Day before yesterday it was up 500 points. तो 1500 में से 1400 वापस गए हैं. Nothing to be worried about. These are base building attempts that are being made by both the Nifty and the Bank Nifty to sort of test, in the case of Bank Nifty 21 EMA, and in the case of Nifty 100 EMA. So all will be well. Tomorrow we join for the penultimate session of Samvat 2080, which has been a fantastic year so far.
Absolutely. With that, viewers, we'll wrap it up on that note, but do stay tuned. Business Today Television will continue to get you all the discussions with top market masters around the festivities. So stay tuned for that. There's a lot more on your screens that needs to be watched.
This Diwali, celebrate with the best you can get for your money.
We bring you exclusive insights from top market analysts to brighten your investment portfolio.
A series of very special shows ahead of the Festival of Lights and a very special Muhurat trading session on Diwali.
From consumer to enterprise, illuminate your Diwali with the brightest tech from Tech Today.
Catch all the festival season action on Business Today magazine, our website, and right here on Business Today Television.
A 30